Hey everyone, welcome back to Corporate Decoder, the place where we take apart complicated company reports so you don't have to. Today we're diving into a bit of a mess at PennantPark Investment Corporation, a company that invests in other companies. Think of it like this. They invested in a business that business's numbers turned out to be wrong, and now everyone's trying to clean it up. This involves a lot of fancy accounting terms and backpedaling, so buckle up. Before we jump in, if you like having corporate documents explained simply, subscribe to the channel, join our Discord community in the description below to talk about finance and investments. So this is an 8K form which companies use to tell investors about major events quickly. In this case, the major event is that some financial statements they previously filed are no good. The date of the report is May 15, 2025, covering an issue that came to light around that time. Here's the story. PennantPark invested in JF Holdings. Because of this investment, they had to include JF Holdings' financial statements with their own annual report. They filed an amendment, meaning a correction to their annual report to include these financials from JF Holdings. Think of it as including a friend's homework in your assignment, which you submitted after the deadline for your assignment. These financial statements covered the years 2023 and 2024. This is where it gets a bit technical. They filed those financial statements because of a specific rule, Rule 309, which tells companies when they need to include the financial statements of companies they've invested in. Now, the problem, JF Holdings accounting firm BDO told PennantPark that those financial statements they filed shouldn't be trusted. Why not? Because JF Holdings was doing its accounting wrong. Specifically, they were messing up how they handled goodwill. Goodwill is basically the extra value a company has beyond its physical assets, such as its brand name or customer relationships. The way JF Holdings was dealing with it didn't follow the rules. The issue was that JF Holdings decided to amortize goodwill, which means they were spreading the cost of goodwill over a period of time. Accounting rules usually don't allow this. To amortize means to slowly write off an asset, meaning to slowly declare it as worthless over time. Because of this error, BDO said that people shouldn't rely on those financial statements anymore. Basically, they're saying those numbers are wrong, don't use them. So PennantPark is making this announcement to tell everyone that those earlier financial statements from JF Holdings are unreliable. Here's a bit of good news. PennantPark is saying that this problem only affects JF Holdings financial statements and that the error does not impact PennantPark's own financial statements. For the year ended September 30, 2024, RSM US LLP, the company that checks PennantPark's numbers, still says that PennantPark's financials are fine. The same goes for the financial statements for the last 2 quarters. They are still considered accurate as well. Management wants to reassure everyone that the numbers they released previously can still be trusted. Even the parts where they talk about JF Holdings are still okay. It's just the standalone financial statements of JF Holdings that are the problem. PennantPark says they will file corrected versions of JF Holdings financial statements once JF Holdings fixes them. Basically, they're waiting for JF Holdings to redo their homework correctly. So what's the big picture here? PennantPark invested in a company, that company messed up its accounting, and now PennantPark has to tell everyone that some of the numbers they released earlier shouldn't be trusted. However, PennantPark is trying to emphasize that this doesn't mean that there is something wrong with their own finances. The error is only in the financial reports of their holding JF. This situation highlights the risks that investment companies face. When you invest in other businesses, you are relying on them to get their accounting right. If they don't, it can create problems for you, even if your own accounting is perfect. Looking at PennantPark, this incident raises a few questions. How closely were they monitoring JF Holdings' accounting practices? What steps are they taking to prevent this from happening again? While their financials are fine, investors might worry about their ability to manage investments effectively. It is important to notice that since the incident, PennantPark is attempting to make sure that their financial statements are correct and accurate, making this a very low impact event and a good sign. What do you think about this situation? Do you think this is just a minor hiccup, or does it raise bigger concerns about PennantPark's investment strategy? Let me know in the comments. If you found this breakdown helpful, give us a like and subscribe for more corporate deep dives. Don't forget to check out our Discord community in the description below. Thanks for watching, and I'll see you in the next video.